All right, so we'll just start by way of introduction. And as you see, and as I said earlier, I'm Karen Bloomfield, and I am currently a partner. You'll see from the profile there in GenCom Accounting and Business Solutions, right? So we are chartered accountants. I have had experience in auditing. That's where I started my career. I also did a bit of teaching. That's where I did my first degree. And I've worked in corporate Jamaica, and now I'm actually on my own in this as a chartered accountant in a small practice. Well, that's just what it is. That's what I do. That's what I've been doing since I started my work life. It has been accounts all the way. So I believe I have a bit of a knowledge that I can share with you, and hopefully I will be able to help you in the various businesses that you are in. All right. So I want you to tell me about yourself. Tell me your name. Tell me what you do. What do you know about accounts? And what do you expect to get from the course? Who wants to go first? Tishana, since I'm seeing your face on my screen, you can go right ahead.
Okay, no problem. Um, so I'm expecting to have a lot more confidence and understanding in the process of taking care of my taxation, because currently someone does it for me, and there's still little elements of the process that I'm not completely clear on. I just kind of trust the person who does my taxes, and my accounts are not in great standing. So I need a way for a non-accounting expert to fully understand what she's doing, so
Mhm.
that even if I eventually outsource the accounting, I still have a good handle and understanding of what is taking place. So nobody can trick me about my money.
Oh, fair enough, fair enough. Have you worked in any form of accounting before? Let's say formally, because we all do accounts. We just don't know it, or we just don't call it that. So
Right.
have you ever done any formal training in accounts?
No, I know a little about QuickBooks. I know a little about currently I use one of those less sophisticated invoicing platforms. I don't
Mhm.
remember what it's called right now. Oh gosh.
Okay, but so you use you do invoicing on some accounting using an accounting software. That's what you're saying.
Yeah, I do invoicing. So like at the end of the year,
Mm-hmm.
what I end up doing is going into that platform, looking at the
Mm-hmm.
invoices that are there, and then estimating my expenses based on what I have in my business account. So I have a
Mm-hmm.
business account with Scotia. So most times people pay me through there. But let's say somebody's having a problem paying me to my business account in Scotia, I just tell them, send it to my personal account, which is an NCB account. So then
Mm-hmm.
you have all of this kind of recon stuff. And then sometimes, like for travel, sometimes I just use any card that is close. It's not always the Next Step card. Next Step is the name of my business. So sometimes I forgot that sometimes I bought gas when I was going on a Next Step training engagement of the other card. So it's a bit all over the place sometimes, even though generally I try to have a good sense of what is happening. So a lot of times when we file the
Okay.
tax, we do some estimations instead of keeping
Okay.
everything accurate. Yeah,
All right. Well, let's see how we can work on that when we go through. All right.
sure thing.
ABSR.
Thank you so much, Miss. Good morning again, everyone. My name is
Mm-hmm.
BSR Nita. I am a funeral director. I own and operate Nita's Funeral Services. And what I know about something that I know about accounting is that it's a very pivotal part of the business, even though it's subtle. and we tend to not pay much attention to it until tax time, until TAJ starts to send you this lump sum of emails, and I'm struggling with that right now. So I do hope that this course will bring some form of enlightenment and help me to maneuver what is happening between us and TAJ at the moment, and also to gain a stronger understanding of accounting principles and recognizing the crucial role in accounting in business.
All right, great. So when we get onto our one-on-one conversations, then we will see how best we can work on that. Tanisha. Tanisha, are you hearing?
Good morning, sir. Good morning. Yeah.
Yes,
Okay.
Tanisha.
I do have a basic understanding of the accounting, but what I'm hoping to get from it, from this course, a better understanding. I don't know if it's the correct term to use, but you find that, especially now it's tax time, you find that sometimes you owe the government so much, you wonder how comes.
Tax time is gone,
And
not Tanisha.
yes, I know. Yes.
Uh-huh.
And
Mm,
there is so much. How do I avoid these penalties? And I'm not sure if I'm using the right procedures. I just want to have a basic, well, not the basic, but the- uh, I need to have a understanding, an overall understanding. I have someone that does my accounting. It's not done timely. So right now I'm in a little dilemma with the government. So I'm
mm,
having to start that out, especially having to you get have to use my TCC, apply for my TCC each year.
mhm.
So I have to get that started out in order to get my TCC. So I just hoping to have a better understanding from this
Oh,
course.
all right. So we all have if it's even a small understanding of what accounts is, as I usually say to persons, even if you take your personal monies and you try to figure out how am I going to spend these monies, what am I going to buy, what am I going to put off, what am I going to save, and so on. You are doing accounts. A lot of persons don't call it accounts. They will probably say they are budgeting or whatever term they want to use, but it is still referred to as accounts. And that's how you manage your personal business. And we want to see how we can translate it into the your business that you have that you are using to generate funds. How do you ensure that you apply those principles that you apply to the money that you carry in your purse or in your wallet? How do you apply it to your business? And we're going to work that through. All right. Matthew, we can talk later. All right, so on your screen, you will see what the structure of the sessions is like. So for the first 2 weeks, which is this week and next week, we'll be having sessions today, Wednesday and Thursday, and next week, Wednesday, right? So we'll be still 9 to 12. And on the 24th, there will be a tax session with a representative from tax admin. Now for week three rather, so we are going 2 weeks together. Then for the third week, that is after the holidays, what we'll be having is I'll be having individual sessions with you, and we'll be doing a maximum of 2 hours per session. So each of you will get a maximum of 2 hours with me, where we can go through with the different things that's happening in your businesses, and we can see how we can work them through. We will also be looking at, I think somebody mentioned that they use QuickBooks. So I will be going through, just basic QuickBooks with you for those who do not have an accounting software that they currently use, and that's an option, right? Hopefully at the end of what we're doing, you'll be able to, as somebody said, that they want to be able to look at their accounts and know that somebody not tricking them or so on, right? So hopefully when we look at these systems, when we go through all of this information, you will have a better appreciation of what's happening in your business, of how to better manage your finances, all right? And nobody can trick you. All right. So let's go. So this is just an outline of what we'll be doing. So we will be looking at the various business types and some accounting terms. We'll be looking at financial statement preparation, and I'll show you an example of what the financial statements is. We'll be looking at 3 financial statements, types of financial statements. Then we'll be doing some basic payroll calculation and how we can record it. And then we'll be looking at the filing of the taxes online, which the rep from TAJ will go in more depth with you on. And then we'll just be looking at the QuickBooks accounting software. All right. So before I proceed, do we have any questions? I see some things coming up in the chat. Let me see if I can manipulate all of that. All right, so Nicholas is working and Matthew is otherwise engaged. All right. Okay, so let's go. All right, so you were given some pre-test questions and I saw, I think it was 2 responses. I know I saw Abiathar and Tishana, right? You responded, and based on your responses, whether you research it or not, your responses were spot on. So without looking at your notes, who wants to tell me what the double entry concept in accounting is about? Based on what you read in order to do the pre-test, or based on what you knew previously, what exactly are we talking about when we speak about the double entry concept in accounting?
Okay. So I can still remember in high school when they were telling me about T accounting. So is where there's a system where there's a double entry for every transaction. So I for I think once there's a debit, there must be a credit, right?
Right.
To balance the equation, so to speak.
That's right. And that's what it is. The double entry concept in accounting really speaks about having a debit and a credit. What does that mean? If you have monies, for example, I'm trying to use practical examples so that you can see it. I don't want to bombard you with accounting terms and so on. All right. So I may get very granular, but bear with me while I try to help you to understand, right? So let us say, for instance, you start a business, right? And you're going to start the business by buying a motor car. It is a new business. Now, in order for you to get that business, to get that motor car, you must get the money from somewhere. So it's 2 things happening there. You get the money from somewhere and you use that money to buy something. So the thing that you buy is actually the car. And wherever you got the money from, it must be somebody lent it to you, or you had some savings that you decided you're going to put in the business, in which case you would have probably either lent the business the money, or you said, oh, this is going to be my capital that I'm putting in the business. All right. So we need to, that's just basic principle. If you have a transaction, any transaction that you have, it must affect two things. If you're buying something and you never have any money, you must borrow the money, right? If it is that you are buying inventory for those persons who have, well, the only inventory, no, the funeral services would have inventory. If it is that you are buying inventory to keep in your offices, right? You're buying gloves, whatever it is. Where are you getting the money from? So you need to make sure that you don't just buy the gloves, put the gloves in there, and you never ever record where you got the money from. And that is what happens to a lot of small businesses where they take persons use their personal monies and throw in the business, and there's no record of where they get the monies from. Or as I believe Tanisha was saying, somebody was saying that they buy gas. So you go ahead and you buy gas and you take it out of your purse and you put it in your car and you never recorded that that was expense to the company. You are using the car to do the company's business and you buy the gas and put in the car, then that gas belongs to the company. But where did you get the money from? Right? And so we don't want to know that you are throwing money at the business and you're not recording it, because at the end of the day, you will be sitting there thinking you're making a profit, thinking that everything is going well. And then you realize that you have nothing to show for it because you were always bankrolling the business. All right. And we'll get into more details on that. The next one, what are the three main financial statements and what is each one used for? Abiathar, you can tell me what were the three main financial statements that you came up with?
That would be Miss income statement, balance sheet,
Mhm.
and cash flow statement.
Very good. Tanisha, can you tell me what any one of those three is used for? What can you find on either of those three statements?
Could you repeat for me, miss?
Uh,
Could you repeat for me, please?
okay, no, Abiathar had said that we have the three main financial statements, which were the balance sheet, the income statement, and the cash flow statements. So I was asking if you can just pick one of them and tell me what you would find on it.
The balance sheet has consists of your assets, liabilities, um, financial statement has your profit and loss.
Okay, stay where you were. You were doing very well. So you were talking about the balance sheet, and you said it had the assets, your liabilities, and what? One more thing.
Assets, liabilities, and mhm,
All right, I'll help you. And the capital.
Whatever
capital.
equity the company have at the time. Good morning, everyone. Matthew check.
Hello, Matthew.
Blessed morning, Miss Karen. Sorry about my lateness.
That's fine. I hope you are doing good.
Yeah, man, giving thanks, man.
All right, good, good.
All right.
Okay, so yes, Tanisha, the balance sheet would show your assets, your capital, and your liability, and we're gonna go and say what those things are. Um, the income statement, what can we find there?
So your expenses and your incomings, and then
Right,
it
your
will tell you your net, your gross and your net profit.
repeat for me, Tishana.
I said it records your income and
Mm-hmm,
expenses. We're talking
mm-hmm.
about the income statement, right?
Correct, correct.
Right. So it record your incomings and your outgoings. In other words,
Mhm.
income and expense. So it gives
Oh,
you gross what you earn for the year, and then, well, if it's a year income statement you're doing, because some people do their income statement every month to keep up to date, which is really what we should do, but you know it go already.
You're
So
right.
you know your net income and your gross income from your income statement.
All right. So the income statement would show what you earn, what you spend, and yes, it would show your gross sales and your net profit afterwards. All right. Your gross profit, your net profit afterwards.
Mm-hmm.
And then the cash flow statements now, this is what shows you what you spent your money on. How did the money come in? Where did you get it from? When you spent your money, what did you spend it on? So you can see the movement on the cash flow statements. So in looking at that, then you will be able to say, okay, this is where all my money is coming from. All my money is coming from self, or all my money is coming from the bank loan. Most of my money is going towards buying assets, or most of my money is going towards paying some form of operating expenses. So the flow statements will show that, and we'll get into that a little later as well.
I
And
know
then
we're
there
gonna
was,
get, sorry, miss, 1 second. I know we're gonna
mhm,
get into it, but I just wanted to ask at this juncture.
mhm,
So would you say your cash flow helps you to understand the flow of your payables and receivables?
mhm,
Um, so it can allow you to do some forecasting, because like for me, my business is a training and coaching consulting company. And
mhm,
sometimes you would work for government, let's say I do
mhm,
a series of workshops for the Ministry of Health, and they don't pay me till 3 months time, and you kind of know that when you work for government companies they take this long time, and then when you work for private companies they tend to pay you pre the engagement or no
mhm,
more than 2 weeks after. So then
mhm.
it helps you to make decisions because you still have bills every month, even though some
Right.
people
So you know not to count on the government's money.
right, and then you have to plan your
So you
business in a way
structure, yeah.
where you're targeting both private and public contracts, because otherwise your business is gonna run into issues. So the cash flow help you to know how to plan.
Right. That so that's a good thing you mentioned, Tishana, and that is where we want you guys to be, because you need to have even a basic set of financial statements, right? So that you know what is going on in your business. Because as you said, you will need to know how to structure your business, not to be sitting there thinking that you have the monies to do something because you did a course and you know that monies are coming into you, and then you start to plan on this money, when if you were structuring yourself properly, you would know, okay, I won't receive this until 3 months time, so I cannot take that income into account when I'm doing certain things, right? So we want to be able to know what's happening in the business, have an intimate understanding. Do not wait until the year end when it's time to pay the taxes that you realize that um, you didn't really make as much as you thought you did, or a lot of times we may be paying taxes, but there are other things that we could have placed in our accounts as entrepreneurs, because tax allows us to place some of our personal expenses there, expenses that are reasonable. So the tax will allow us to place some of these expenses in our businesses, and that could help us to pay less tax. So we have to have some form of planning going forward, so that at the end of the year, when it's time to file the taxes, you're not surprised. All right, because that can really fold you. All right. So how do you determine the net pay of an employee if you're given the gross pay? And that's easy, because that's one of the things we're always looking at, pay. How do we determine the net pay of an employee?
So when they take out all the taxes that we have to pay, NIS, income tax, all the other taxes. So the gross is the total before those are removed.
Right. So the gross is what the employee would have earned. The net is really what they would have taken home after we take out all of the deductions which are required by law. All right. And we'll be doing a basic calculation of payroll as well. So I'll be teaching you how to calculate a basic payroll, and I'll be teaching you how to calculate your tax. Right? As an entrepreneur, how do you calculate your tax to pay over to the government?
Will you teach us the process to get um our employees taxes paid? Because um I normally just employ people like on a contract,
Mhm,
because I'm trying to run away from having a full-time employee where I have to do all the tax deduction stuff for. But I know
mhm.
that I can't keep operating that way if I'm gonna
Right.
build a very robust business. So I was wondering if you would walk us through the process, because having worked a 9 to 5 and I have a part-time 9 to 5 and looking at your own pay slip, you understand how it's calculated. So like for me, that's not a challenge, but the process that I must walk through if I must get an employee paying up their taxes, and if there's any taxes that I must pay as a business, I
Mhm.
don't think I fully understand the process that I would have to walk through. So just putting that out there, hoping that we'll cover that over the next 3 sessions, the process itself.
Yes, because when you start your business, they usually ask if you will have employees. Now, if you say yes, then you are opening up yourself to file a return. So if it is that you said yes and then you did not have any employees, the tax administration expects that you will still be filing a return, even if it is a nil return, right? So that is the first part of it. Now, if you employ persons, um, as long as you employ them, you are required to file and pay over the taxes. If you are persons on a contractual basis and you say, I mean, that needs to be clear in their contract that they are responsible for doing their statutories, for paying their taxes. However, the tax administration will tell you that there are certain criteria that they look for that will determine if the person is really an employee, because they will tell you some things. And what I want you to do is to have the questions in mind that you want to ask a tax person. All right? Because there are certain criteria that they would look on to determine if the person is actually employed to you or the person is a contractor. So they will look at things like the work hours, whether you control their work hours, if you give them material to work with. So if you say somebody's a contractor, yet they come to work and they have your computer and everything that they need to work is yours, then tax may argue that that person is actually employed to you, right? If the person has their own tools and so on, and they come, let us
Just
say a
open.
gardener, and the gardener will come and the gardener has his lawnmower and so on, then that person may be considered a contractor. So there are certain things that we look at that determine whether the person is employed by you or the person is a contractor. And a prime case to think about, and it all came out of a case that happened several years ago with security officers, because security officers were expected to pay their own taxes. But then when it went to court, no, the courts ruled that the security officers were employed. They got uniform, they worked with the employers, stuff and so on. And so they were employed, even though you may be saying you need to pay your own taxes. The courts ruled that they were employed and the company should have been paying their taxes. But that's another story. But these are some of the things that you can ask the tax person if there are basic requirements that will preclude a person from being called an employee. But as long as you have the person as an employee, you are responsible for paying the person's taxes. All right? Tanisha, notice your mic is open. I don't know if you were trying to say something, so pardon me.
Yes, because regarding that same situation, I
Mhm.
found myself into it also because I was of the assumption that um if you discuss with the person that you're employed on a contract basis and you're responsible for your tax, then you are not responsible to pay over those taxes. So right now I am actually in a dilemma, but for a particular year, owing over almost 1 million. They're saying to me that I owe NHT and NIS, and I don't understand because at one particular time, I myself was employed at BNS on a contract, and I just said, I'm not sure if the timing would have, but the material I would have been given material to work with, and I was on a contract because in the contract it stated that um, I am responsible for my returns.
Did you
But
do it?
no,
Did you file your returns then?
sometimes,
No, because no, what is happening, you see, is because they are cross-checking.
no, but no, I know with the business they are saying that based on I have these person on a continuous once they are with you for I think it's
Yes,
a
120 days,
yes,
without
it's not
taking a
a
break.
contract. Yes,
It is
it's
no
not a
full-time
contract.
employment. So persons will employ persons on what they contract, but then they break them after 120 days. They break them, so they probably go off for 2 weeks or a month or whatever it is, and then they start again. So
But
there are some nuances to
But
it
I
which you
think
have
the
to
labor law, if you
understand.
employ the person within 3 months, I think you didn't break the contract really. So
Right.
I don't.
So
How do
that is
you
what.
avoid all these things?
Right. So when the tax lady comes to you, you ask her specifically what are the how long can you break the contract for it to be considered a contract? Because there are some of the things I think are just trivial. I don't even understand why they put it in to consider the person an employee. Because if I have a gardener outside and the gardener only comes 3 times a week for 4 hours, and the gardener uses the lawnmower and a machete here, and I give him the weed spray and whatever it is, they may consider that person an employee. And I'm saying, no, the person is just a contract. But they may look at something else to override every other thing to say the person is employed. So we can take it up with the tax persons, and I'm asking you that when we get to that session, please speak. All right,
Okay.
because that will help you. And in some cases, you may find that the person you're talking to or who is conducting the training may be able to help you with your session.
Okay,
All
then thank
right.
you.
Mhm. All right. So, all right, I'm navigating two screens. I'm not sure where I am. Okay. All right. So we're going to look at 3 business types. All right. The first one is a sole proprietorship. Um, can anyone say what this is? Sole proprietorship. All right, so I will
So,
jump right into it.
okay, sorry.
Okay, somebody's talking. All
Oh,
right,
I
tell
was
me.
gonna say,
Tell me.
a sole proprietor is a single owner of a business. You are the business, and the business is you.
Mhm.
The business doesn't have its own, what I like to call personality. The business cannot be directly sued. So if somebody should sue the business, they sue you because
Nice.
and then you do a business name registration at the company's office if you're registering as a sole proprietor.
Is there any disadvantage to having a sole proprietorship outside of somebody suing you?
Well, I was gonna say there's less protection of your personal resources. You're
Mhm.
more vulnerable and exposed when you're a sole proprietor.
And financially, all the costs rest on you.
That's right.
Yeah.
Any advantages though?
Well, you are fully in charge. It's not like in a partnership where, somebody else have to sign on everything. So you're a little bit more agile to make decisions and so on when you're a sole proprietor. And there's less paperwork, and it's cheaper as well than if you were, for example, a
You mean less paperwork for setup?
for setup. If you're a
Because
company and you
paperwork
need
can kill you in the business though.
with sole proprietorship,
No, I'm saying in the business itself.
oh no,
Paper
I'm
can,
talking about
yes.
I'm talking
Yes,
about like the
setting.
annual filing and all
Mhm.
of that. There's more paperwork to do your annual filing as a company.
Abiathar, you've been quiet.
I'm here, miss. Just listening, miss.
Okay, just making sure that you're still there. All right, so let's see. Advantages, easily and quickly formed. You can just walk into the company's office and in no time you have a business. All profits belong to the owner. You don't have to share it with anybody, it's all yours. But likewise, all loss belong to you. You can make decisions quickly. You don't have to go sit around a board, have a board meeting, or wait until everybody is available. You can make your decisions on your own. So those are just some advantages. And then we had some disadvantages. As Matthew said, financing can be an issue. All the risks belong to the owner. So if they're suing you. You're the face of the business and you're the business. And when the owner dies, the business ends. All right. So that's sole proprietorship. The next one is a partnership. We have any partners here? Anybody in partnerships here? All right, this may be one you can consider, maybe as you go along, or maybe when you choose to start another business. Let's look at some of the advantages. It's like the sole proprietorship. It is easily and quickly formed. And because it's a proprietorship with 2 or more persons, then you have multiple people, multiple ideas, multiple skill sets, right? That can be deployed in the different areas of the business. So you don't have one person who is the accountant, the marketing person, the payroll person, the engineer, and so on. You may have persons who can contribute their skill set in different areas. So it's not as burdensome as it would be on a sole proprietorship. Again, you can have capital from several resources. Different persons will come in with different capital. And the capital may be in the form of expertise, because you may have somebody that has money but doesn't have the expertise, and somebody that has expertise but does not have the money. So you can gain that from a partnership. And then the disadvantages we're looking at would be decision making delayed. As I mentioned before, you may have to call a board meeting just to make one simple decision. And then you may find that persons, you can't agree. Everybody, you have 5 persons and you have 5 different opinions. And so it may be challenging to agree on something that requires immediate attention. And then the profit has to be shared. Now, of course, the partnership will determine how the profit is shared. So if it's 2 persons, you may decide you're going to do 50-50, or depending on what one partner contributes, then you may choose to have a different ratio to determine how the profit is shared. With a partnership, it ends on the death or withdrawal of a partner unless you state it in the partnership agreement. So if you have a partnership and it's 2 of you and one person dies, it is no longer a partnership. It has now become a sole trader technically, right? But if your partnership agreement, and it is important that when you go in partnerships, that you have an agreement which stipulates the operating procedures, it stipulates what should happen if somebody dies, it stipulates how capital will be contributed, all of those things. It stipulates how to deal with disagreements, how to deal with somebody leaving, and all of those things you would need to have in your partnership agreement to choose that route.
So 1 second, Miss Karen. That was a question
yes.
I had, right? In terms of should there be a break in the partnership, right? Not necessarily death, but maybe a disagreement and a break the partnership. Would the business have to close and restructure?
Yeah, so if you didn't have it in the agreement, suppose you had it in the agreement that if there is any disagreement and one person leaves, then you can probably continue with the name. But most times it's a name that is similar. Then you may a name that both parties or all the parties would have agreed on. So let us say that there is a break, whatever reason, disagreement, or for whatever reason, the persons are not in the partnership anymore. Then there may be some fuss about the partnership name, or there may be something about the logo, and it may end up being some matter for litigation. You don't want that. So either you state it in the contract, or you're going to have to go through some form of legal maneuver to have that detachment done legally, because it may come back to really bite you.
Understood. And what if it was just a partnership, was just providing finance, and that the name was my name, for say, and concept for the business and all of that stuff? And now I was in a better position to finance the business myself, with them being, wanting to leave, separate.
Okay. Again, this comes down to what you have in your agreement.
Right.
Because we know, even if we don't get so formal about it, we know, even if two of us just normally we just decide we're going to do a thing, nothing legal, no legal, formal business, and so on. And you know that if any falling out happen, people decide that you can't use my name anymore. People decide that this was mine. I started this, I did this. So it is always good for you to ensure that your partnership agreement states these things. Things do happen. So ensure that the partnership agreement has all of these, everything you can think of. How do you deal with it should in case there is a separation for whatever reason?
Yeah, understood. Thank you.
So maybe in there, it could be clear that the concept was yours, the logo was whose, whatever, the various things you itemize it, for instance, to say this was and what should happen to these things. Some persons may say, look here, it doesn't matter. You can go ahead and keep the business if you want. Some persons will say, no, you are not going to use my business. And so you may be forced to go ahead and change the name, restructure your business, get a new partner, and so on, change your financing arrangements and so on. Some persons don't really want to be in the business. They just say, okay, I'll just finance it, and they don't really care. Just give me my share at the end of whatever period. I don't really care. I just give the money and I don't care. But all of that needs to be clearly stated in your partnership agreement. That clear?
Yeah, man. Thank you, Miss Karen. Crystal clear.
Okay. I lost somebody. Did I lose? I lost Nicholas or Tanisha? No, not Tanisha. Who am I not seeing? Nicholas? Or we are all here?
I am back now. Nicholas here. Sorry for being late. I had a student doing an exam this morning.
I'm still here.
Okay, yes, Tanisha, I'm seeing you. Nicholas, have you been hearing?
Yes, I have been hearing.
Any questions so
I
far?
was out for a while. I just joined back, so no questions so far.
Okay.
All right.
All right. So we're looking at some business structures. All right. So let's go now. So then we have the company, which is the legal entities. So most companies you see with LT at the end, company. What are the advantages? So it limits the liability to the company owners for debts or losses, because in this case now you have a company that you are dealing with and not a person, as in the sole trader. The personal assets cannot be seized for debts. This should be for debts. Disadvantages: you have the government regulations, and the legal entity tends to take a long time to form, right? You can have issues of matters of publicity. Anything goes wrong with the business, it's out there open air, and it can cause problems for your business. It can be an administrative nightmare, especially when it comes on to your taxes and all of those other legal requirements for a company. As long as you have a company formed, right, you are required to file your returns monthly with the government, prepare financial statements and file with the government. All right, so it can be burdensome, especially if you don't have somebody that deals with it
That's
on
what
a
I was
monthly
saying earlier,
basis.
Miss. When that is not just every business have paperwork, but when you're a company, you have the cumbersome filing work every month, and plus the big bit that you have to do annually, and the
Yes,
renewal fees higher. It's a lot.
right. So when you fund the businesses, I mean, you have to look at the advantage. What matters most, you know? Some persons may want to form a company because it may be easier for other to do business with others. You know, it may be easier to get a loan from the bank rather than when you're in a partnership or as a sole trader. Persons may have, for instance, a sole proprietor, right? They don't do the accounts, but they want to get a bank loan. Now, the bank is going to ask you for things, right? And I'm going to speak from experience. What I find is that some persons will turn up as sole proprietors, they don't have, their documents are not in order, and they want to get a loan. Now, listen to this. When you want to get a loan, you can't go to the bank with your financial statement looking bad, right? You have to show that the business can function or is functioning, and the business can pay back the loan. So the sole proprietor will want you to prepare, and when I say you, I mean like a chartered accountant, right? To prepare a set of accounts for the bank, which will show that they are doing good, right? Things are looking up. But then when it comes to tax now, they want you to file the returns for it look like you're not doing good, so you don't pay the tax. You cannot have two sets of accounts, right? And these are some of the things, remember, that the banks and the tax offices are working together. So you may turn up at the bank with a fancy thing, and then at the end of the day, now you don't want to pay any tax, but the tax is going to say, but look here, you showed over the bank here that you were doing well. So what happened now? You know, and that can cause the tax auditors to come in on you and cause all sort of issues. So it is important that you are aware of what is happening on if it is not even monthly, quarterly basis, you need to know what's happening in your business. All right, clear as day.
Yeah, man, good to go.
Yes, Miss Claire. Let's go.
Right.
Yes, miss.
Okay. Now we have two terms that we're looking at right now, and it's bookkeeping versus accounting. Now, when we talk about bookkeeping, we talk about just the basic things of just putting the information together, right? It's how you get the information together so that your accountant can use it, or the person is going to do your tax can use it, right? So that is just basic, just putting the information together. So some of the things involved in bookkeeping, and as you see on the screen, it's just the first step accounting process. So if you're just putting your paper together, you're doing some form of accountings, but it's just basic. All right. So what does it involve? First thing, just collecting the supporting documents. So when you go out to buy stuff, make sure that you keep your invoices, keep your receipts. If you get things on that thermal paper, that's like from the machine and so on, make sure you photocopy it because it's going to wear out after a while. You're not going to be able to see anything. I've got records, and when I'm looking at the records, it's a blank paper. And I'm saying, like, where is everything? And it's because it's on this thermal paper, it wears over time, and there's nothing. I can't use it, right? And as accountants checking your books, I have to have evidence. If I don't have it, then there's nothing I can do about it, right? So you make sure. If it is that you are, let us say, even selling, and you don't have a cash register or anything fancy to do, write it down in a book, right? Nobody's necessarily saying that you need to go and buy QuickBooks software if you are not able to afford it, but you need to have record keeping. That's basic. All right. So ensure that you collect all your invoices, keep them, get a little paper folder or whatever it is, and put them in there because you are going to need them. You record your sales. You're selling something, Nicholas, you're teaching your student and they're giving you monies for the class. Don't just put it in your pocket and then you forget about it. Record it, all right? Because you're going to need it, all right? So if you have a book, you write it down. If you have one of those receipts, you write it in there because we are going to need all of the information to collate your sales. Persons will turn up and say, but I sell more than this, or my revenue more than this. Me know. Yes, you know, but I can't verify it if I don't have supporting documentation. Make sense?
Makes sense. Makes sense.
And I'm speaking to you from an accountant point of view because I deal with persons with small businesses as well. And when they come and they don't have the information, I can't do anything because I have to be able to verify what you are saying. Okay? Storing. So that's a part of the bookkeeping process. You ensure that you store your information properly. So I spoke about the thermal paper. You may need to buy some, if it's even file jackets, if you buy file jackets and clip the end of it, I mean paper folders and staple the end of it, that gives you a file jacket. I'm just saying basic things, but whatever you do, get something to store your information in. All right. Then you need to be able to access the information upon request. So for persons who are using accounting software, make sure that you're backing up your information here. So you don't want, when somebody comes to review your information, you realize that you can't access the information. You realize that it was hacked. You realize that what you had in there, the information had changed and you didn't know all of these things. Make sure that your information is stored and it's easily accessible. So if somebody comes to audit, you can just take up a box because you can store your things in boxes and say, okay, these are my documents. All right.
Well, I
What
find
does that?
myself walking with a lot of books since the last time it's carried. I have
I
a
hope
lot
things
of
in the books,
notebooks, man. Every minute me I flip through pages, man.
is it helping though?
Yeah, man, most definitely. Because I
Right? Because you
wasn't
don't want to be walking
journaling.
around with the books and the books not helping.
No, I wasn't journaling and things like that. And just like you say, simple bookkeeping go a long way.
Mhm.
Simple bookkeeping and just writing things down.
Yeah.
Even, before you get to the app or get to the program.
And the funny thing is that a lot of times we do that with our personal monies and our personal things, because some persons can probably find their payslip from way back when, or you can find if you have a mortgage, you have all the legal documents and so on. You have those things for yourself. But when it comes to the business, I'm not sure why we tend to get so loose with it. But we need to.
What really made me get in tune with it was because I realized I was giving a lot. Giving
Giving and
away
not
a lot.
recording
Yeah, and spending a lot and not recording it,
it.
just being inclined with getting things more business. Business
Right.
record. Everything start record. Whether I say me I give it away or me sell it or I lend it or whatever it is, at least me record it. Me have the knowledge,
Right.
to do what I want to do with it.
Mm-hmm.
For sure.
Yeah. All right. So what does accounting involve? So as I asked Matthew, he's writing down the information, is he using it? And that this is what accounting involves now. All of the information that you would have collected when you're doing your bookkeeping, you want to get it into a manner that makes sense to you, right? It doesn't make any sense you have all of the receipts sitting in a folder, and at the end of the day, you can't say, I spent this much. You have to add them up, right? You have to analyze it because you want to know, okay, of all of this that I spent, how much did I spend on gas versus how much did I spend if you had to contract somebody to do something for you? What is the spend on one versus the other? What can I cut back on and put on something else? So you collect the information, but you want to make sure now that the information is that you have is summarized and analyzed and in a meaningful way so that you can make decisions from it. Right? Then you want to verify that the information is correct and that it's classified properly. Because you don't want to be buying, for instance, you buy, let us say you buy some loose tools, right? Something that, I mean, you use it 2 times and it's lost or it's broken, so you know it's not durable, right? Let us say you buy some of those kind of equipment. But when you classify it now, you put it in your fixed assets, and fixed assets mean that they're going to last for a long time, right? So it's that you would have things in your fixed assets, your assets, what the company owns, you would have things in there that the company does not really own because it has no durability, it's gone, right? So we want to be able to classify our things properly. We want to know what our debts are, what we owe people versus what people owe us. We want to separate that, right? So again, just repeating, you have the information, you're collecting it, you're storing it, but you want to now analyze it to make sure that you can interpret all of these pieces of paper, right? Then now you want to report on the information. So it's summarizing and analyzing, you're verifying and classifying, and now you want to report on it. And this is where we come to our financial statements. When you are reporting on it, you can say, okay, these are my assets. We're going to get to the terms. These are my liabilities. This is the capital that I put in the business. This is my sales. This is my expense. These are other income, meaning other things that not necessarily related to the business, but I got some monies from it. And so you are able to put this information now in a formal way, and these are the things that the bank is going to look at, that the government is going to look at, that if you want a partner, the partner is going to look at to determine if this business is worth investing in, or if this business, you can get a loan for this business, that kind of a thing, right? So again, you collect your information, you record it, you store it, you file it, you have it in a way that can be accessed, and then we use that information and we're gonna turn it and summarize and analyze it and classify it and all of that in order to get a financial statement. Because at the end of the day, that's what we want, right? A set of financial statements that you can use to determine what is happening in your business, right? Any questions there?
No, miss.
Okay. All right. So now, why really is accounting important? And I mentioned some of those reasons while I was talking. So you want to know if your business is making a profit or loss. Should you close up shop? Which of your products are making a profit or loss? Do you need to continue doing a particular product or service? Because you may have a business that's doing various things, right? So you may have a business that deals with, like Matthew, for instance, you do the stunt riding thing versus the merchandise that you sell versus the appearances in your films and so on. Which one of them takes up a lot of your time but is not profitable? Because you may need to look at your profit and loss, look at the different avenues, the different things that you do, and you will recognize which one of them is good, which one of them you need to get rid of. Some of them you may need to hold on to, or you may want to hold on to, even though it's not making a profit, because it may have some other appeal to it. So for instance, you can get other linkages from it, right? So it's not making a profit, but you have some contacts there that are good, good for future use, good for the business. So you may not want to get rid of that arm of the business, but at least you know, right? So analyzing your profit and loss will help you in that way. So when you're setting up your profit and loss, don't just lump everything in one and call everything revenue. If you have different streams of income for that business, it would be good to know which arm of the business is working and which isn't. All right. Then accounting is also important because it tells you what your financings are. So when you look at your accounts, you can say, boy, my expenses are coming in are much more than what I'm earning. What does it mean? Should I get some additional monies? If I continue in this way, can I afford to pay my staff or to pay my suppliers? If I want somebody to invest in my business, can I show them my balance sheet and that will appeal to them? What is my net worth? My assets versus my liabilities? Am I more indebted than what I have? So looking at your financial statements will help you to determine that. Again, what do I own versus what do I owe? And that is where we look at the assets, which is what you own, versus your liabilities, what you owe, right? You may want, when you're looking at your liabilities, what people owe you, you may say, well, am I ever going to collect this? So if you know you're not going to collect it, you might as well get rid of it from your books. Do I have to do a write-off? Tanisha, when you're looking in your store, all of this inventory that you have there, and we'll look at the term inventory, all of this inventory that you have there, can you really sell it? Is anything expired? Is anything outdated? Meaning perhaps you have a drink that was it some days, some time past, but now you have one that has, far surpassed that. And so this one is not selling. So it's now a slow moving item. It's not going anywhere. Can you look at can you look at your inventory and say, okay, this is how my inventory is. This is slow moving. Can you say that, Tanisha? I'll ask you. Tanisha?
Yes, yes, I can. There's some items that if there's some that will slip through the crack, so I have to just maybe dispose of it. Some companies will return them, exchange them,
Hmm.
while
So
with
do
some
you
they will.
record these things?
Ah, to be honest, no.
Because guess
I
what?
Yes, go ahead.
Sorry, I was about to say anything that you're doing in the business has an accounting implication. So if it is that you buy the things, for instance, right, you would have spent money to buy it, right? So you
Yes,
should have recorded it that you purchased that, right? And it is now going to be in your inventory in your store. So it's on your books that you buy it and it's physically in your shop. When you're getting rid of it, whether you're going to destroy it or you're going to send it back, if you do it physically, so you get a truck and whatever and you send it back or you send it to the dump site or whatever, that which you just did physically need to be done in your accounts.
yes, I
So
am aware of. To be honest, I
mhm,
am aware of it. But sometimes when you have so many things to do, honestly, sometimes I only use psychology on the staff. So whenever something, I would tell them I need to get the total, whatever it is. But I know from my perspective, it's not being done properly because I just record it there and that is it. I don't record it in the book to reflect. But I know I'm doing things that are not right.
mhm. Okay. So we all know, right? So we just need to try and fix that. Okay. And and I'm just trying to remember what each person does and trying to link it here. So for perhaps Nicholas with the cars, based on what you see happening in the industry, do you need to get a different set of cars? Do you need to get, I don't know, something? Do you teach persons, for instance, who are disabled? I don't know. That just came to me.
No, I haven't thought any. Well, maybe someone with probably a short hand. I don't know if that would be as disabled, but yes, I've
Mhm,
thought persons like that.
mhm,
As well as to get a different car. Persons have been asking about manual. I don't have a manual vehicle, only automatic vehicle. So that is a thing to
mhm,
get, as well as a bigger vehicle in terms of a van.
mhm.
That would be a thing to get as well.
Right. So when you look on your financial statement, you shouldn't be able to determine if you can afford another vehicle. You can
Definitely.
afford a manual vehicle, or suppose you can get, let us say persons are disabled in the legs, right? And somebody wants to learn to drive. And I'm just saying that. um, do you have a vehicle that they can just, I don't know, just drive without pressing gas?
I've never seen that vehicle before.
Yeah, oh, okay. Maybe
Maybe
you
a
should think
Tesla.
about it.
Maybe a Tesla.
No, but I've seen persons drive that use crutches. So
Yes,
how
I
do
think
they
I've seen that.
drive?
I think I've seen that. They would like probably have an attachment, or they probably bring up the gas pedal closer to the seat. Gas and
Okay.
brake pedal, yes, it can be adjusted.
Hmm. So even, I mean, even thinking about what is happening in the industry, then you can look at your accounts to see if there's anything that you can do outside of the box. If your finances would accommodate that or could accommodate that, can you go to an investor to say, okay, I want to do something different from the norm? Can you sell your business idea to an investor based on the accounts that you have? All right, so we need to get those up to date. All right. So when we have our financial information, who do we want to see besides us? We are preparing this information, but it's not just for ourselves alone. Other persons may need to use it to help us or for us to help ourselves, right? So some of the users of the information, can you tell me some of the persons who would need to see your financial statements? You can
Potential
alter.
investors.
Potential investors, yes.
If you're
Bank if
getting a
you want
bank
one.
loan, the person at
Bank,
the bank.
mm-hmm.
Your accountant, if you have one.
Yes, your accountant would need to know to pretty much get the basic information. But what would they use it for? Abiathar.
They'll use it to, see what's happening with the business, to complete an audit, to see if everything
Okay,
is
so
where
the
it's supposed.
auditors,
Right.
that's what you mean.
Yes.
Okay. All right, awesome. Anybody else
No, Miss, I
would
was
need to
gonna
see?
say auditors, but I just
Right.
wanted to make sure that my colleague is clear that the accountant not gonna do the audit. You're going to have your auditor different from your accountant
That's correct. The accountant should be preparing it for somebody to see.
to audit. Yeah.
Right. That's what I
Right.
meant in that capacity. Because as entrepreneurs, I generally don't think that the accountant will be the one to do the audit. So that's why I mentioned that the accountant will need the basic
Okay.
information in order to prepare for the auditing.
Auditors.
Just to
Okay.
ask Miss Karen,
Mm-hmm.
will you be
Mm-hmm.
doing like guiding us in terms of the steps we need to take to get proper audited financial statements? Because the truth is, sometimes as a small business, some of
Mm-hmm.
these accountants are very expensive. And there are some levels of business that you can't do without audited financial statements. You have some grants that would give a good amount of money, but they're required to see audited statements before you can access it. So even when we do up our little income statement and balance sheet and blah blah blah, if we don't have audited statements, we're still limited in some instances.
So auditors are usually expensive, mainly because I mean the time it takes to do the work, and also it's a risky thing, right? However, what can you do? And it's where it started. Bookkeeping, first place. Make sure you have all your supporting documents. If you have your supporting documentation, your audit is done in no time. What usually takes a long time is the back and forth to try to find the figures. So you have your records, right? And you give it to the accountant, and the accountant is going to prepare the accounts based on the information that you give them, right? So if the information is missing, it means that there are going to be gaps in your accounting in your financial statements. Now, when it gets to the auditor, more than likely the auditor is going to see that gap. When he sees that gap, or she sees that, she's going to ask for support. And then support can't be found, and we're going back and forth, back and forth, back and forth, and the support can't be found. Now, there is absolutely nothing that they can do if the support is not found more than to write something to say, I cannot verify this. Because at the end of the day, what the auditor does is verifies what the accountant gave. So if it is that you say that you have, let us say $1 million in the bank, and I sent for a bank confirmation, and the bank confirmation came, and the bank confirmation doesn't have that amount what that you say you have. There's a discrepancy. If it is that you say you have fixed assets, and as an auditor, I want to verify the fixed assets. So you are saying you have cars and you have bikes and you have whatever. And I say, okay, I want to see, let us say even physically, because there are times when the auditor will check the thing physically. So you may have it on your books and the auditor say, I want to do a physical check. And you can't find the car, you can't find the bike, you can't find, the auditor is going to say it's not there. Because if they don't see it, they're going to say it's not there, right? You have um, a list of people saying that these people owe you. The auditor is going to send out a confirmation to these people who you say owe you. So you have this long list of people coming to $500,000 to say these people owe you. That's money you're supposed to get. As an auditor, I send out confirmation. And the confirmations come back and the people go, I don't owe that. The auditor is going to say, that is not so. So it comes back to your responsibility as an entrepreneur to ensure that you have your records together. You store them, you get them, you keep them, you write them down, you store them, because it is going to make it difficult when an auditor comes and they are not able to verify the accounting. I saw your avatar. The financial statements, it is yours. It is your responsibility. All the auditor does is verify what you have on your financial statements. They are doing nothing else but verify. And the verification may come in different formats. Confirmations, they do physical checks, they do analyses, because if they see the movements not making any sense, then they're going to have a problem with that too, and they're going to want clarification. So everything comes back down to you, the entrepreneur, keeping your records properly. Make sense?
Yes, Miss.
And
Question, Miss. What if
Uh-huh.
you had can I start now? Is there an opportunity? Is there an opportunity to start now? Because I've lost so much receipts and lost track of a lot of things. So tell me a little bit of if how do I start now? Do I start securing the papers from now and tracking expenses should say day to day for the future, for the unforeseen future?
Mm-hmm. No better time than now, because if it's lost, what are you going to do? Unless you have a way of getting back that information. So if it's lost, it's just lost. But now that you know, you need to do it, because this is a new year. We're what, 3-4 months in. So you have the opportunity to find those information, put them together, start to keep a little file, write down what you need to write down, to make sure that when it's time for you to do an audit, when you want to go there and get monies from the bank, that you have something that can be put together.
And miss, I had them in a miss, but funny story, it's because of the storm that we endured, miss. It was a whole thing, miss, because at that time I wasn't thinking about the electronic side of things, which we
Mm-hmm.
now have access to openly.
Mm-hmm.
As free as Microsoft Excel, I wasn't thinking about that. So when the weather came, it came and
Mm-hmm.
did a lot of damage. So
To
we're
your
now
stuff.
recovering from that damage in regards to getting
Mm-hmm.
back and gathering some information.
Oh, and you had never, you see, and that is why it is good too. So even if you do an audit or accounts or whatever it is, you have them at least somewhere. Because if you have an accountant, for instance, I imagine the accountant would have had it somewhere. If you lost it, you just lost it. Because there's nothing you can do. But yeah, just start from now.
Okay, miss, thank you.
Try and get back on track. Mm-hmm. All right. So I was clear, Tanisha. Not Tanisha. I think it was. All right. I missed the name now. Mullins, Tishana. In terms of the audit, you get what where I was going.
Yeah, everything is clear.
Okay. All right. So yeah, the users of the information as we were going through, they may be external, and we talk about the GOJ and tax administration because they may turn up and they may want your accounts because they want to see if what you're declaring is correct. Investors, as we said, nobody wants to invest in a business if they can't understand where the business is going and they see that the business is not doing well. Suppliers and creditors. I mean, I think more and more I'm seeing suppliers, persons who you taking goods on credit from, asking to see your financial statements. Your customers, some of your customers may want to see your financial statements as well. Financial institutions, you go get loan. Sometimes even if you want to open an account, people are asking for these things because they want to know that you have a business and you're not, getting monies from illegal means to put there. So they want to see evidence of a business.
Sorry, customers want to see your financial information, Miss.
Some customers may want. I there was something I was doing the other day and I saw a customer asking for financial information. I don't know why. Um,
Miss, I'm
but
wondering if this applies more to when you're publicly listed. Because when you're publicly listed, you must, it's not even if they want to, but when you're publicly listed, your financials must be available and must be submitted. I think it's on a quarterly basis. You have to submit
yeah,
everything.
man, and it's up there for everybody to see.
Right. But I
Mm-hmm.
guess now, as a sole trader, it would be a very unique circumstance for a customer to, I don't think they can demand it, but
Well, they can't demand it. That's why I'm saying I found it strange that one person had requested information, but I guess they want to perhaps to know that I don't know that they're not getting in a bind from somebody who is not legit. I don't know. Perhaps, especially if it's a large scale customer, they don't want to get mixed up. Maybe the tough whatever it is that the company is selling can be up to scrutiny. So if you were going to buy, I don't know, buy a car, I don't know that you need to see a financial statement. I
but
really
if
don't
I
know
was
why
gonna buy a
everybody.
car, then I am the customer.
Mm-hmm.
But
But
for
you
a
wouldn't
customer
necessarily
who's
want
buy,
to see the financial statements, right? You just want to, I guess you would research the company to know that the company is really a company and not just somebody buying two cars and saying that they're a car dealer when, they're doing shady business.
yeah.
Right,
So
Miss, or
maybe
a
in
law
that
firm.
vein,
I'll understand a law firm.
say,
But
say,
I don't
say
see
or
myself as a customer asking a law firm for their financials to know that they're legit. I'm just saying there are many ways to know that a company is legit
company is legit.
without
Yeah.
asking. If it's not a publicly listed company, I think
Mhm.
it's a bit presumptuous to ask for people's financial statements.
Yeah, I think it's probably more about what the company that they were, what the company sold. I think that was a little extra, but but yes, I've seen it. All right. So other users, internal, that's you. Employees may want to see the financial statement too. That could be another area of argument, like the customers. Because some people will say, why employees want to see the financial statements?
Only
But
employers
again,
that
if it
can
is,
interact with it. Like,
mhm.
no, I said they can help with bookkeeping, but there is no, and it depends on the culture of your company. Um,
Yeah, because a lot of companies do, if it's not the full financial statements, then there are some things that they make the employees aware of, especially when it comes to sharing bonuses and so on. They may want to tell persons that, okay, maybe your department is not doing well, or your department is doing best, or that kind of a thing. So they may do the financial statement on a segment basis. Yes. So the marketing department or the promotions department and so on can see, because one of the things with doing accounts, and I think I'd mentioned it earlier, is that you can segment your account. So you can report based on the different areas that you do. So you can have financials, segment the financial statements in terms of the activity. You can segment it in terms of your department. So you can know whether a department is working well or whether an activity is working well, right? So persons may choose to segment the financial statements for employees just to see the areas that they're working in. Let me see if I have another. No. Okay. That's all I had there for internal. All right. You want to go drink some water? Or we go continue?
I thought you were talking to
Continue.
somebody in your
Oh,
background in a minute.
huh?
How long is the water break? 5 minutes?
You can take 5 minutes and drink some water. Is that good?
I don't mind.
Yes, miss. That is okay. That is
Yeah,
okay.
that
Thank
was
you.
that was for selfish reasons too, because my throat is dry. So give me a moment, please. So 5 minutes. So 10:43. Give me a second. Let me have some water, please.
No problem at all.
I'm back. You ready again? Are we here?
Yes, Miss.
All right. Do we have any questions before we move forward?
No, Miss.
Okay. Nicholas is still with us?
Yes, I am still here.
All right. Present. Abiathar answered. Tanisha, you still with me?
You hear me? I'm here.
All right. Present. Matthew?
Check, check, check.
Present. Present.
So we're
Okay,
all
okay.
here.
And Tishana is here. Okay. All right. So moving on. So I have a little flow chart on the screen. And this is just taking us through what we call the accounting cycle. Remember, we just spoke about what is bookkeeping versus accounts, right? Accounting. So just look above here to where we have source documents, right? In the circle, in the cycle. So the cycle is a circle, goes around, round and round, right? So the first thing we have, we're starting from our source documents, which we said, this is where the bookkeeping comes in, where you collect your receipts, your invoices, your bank statements, all of those things that would give us information that would go together to give information for our accounts, right? After we get those source documents, we need to enter them in a system. No, the system could be automated or it could be manual. But whatever it is, we need to get it in a system because what we want ultimately is to make the information make sense. This is raw stuff. This is ingredients, right? We want to make a cake. We have to do something with the ingredients in order to make this cake. And in this case, the cake we're talking about is our financial statements. So we're going to mix and put everything together. So we start out with our ingredients, our source documents. After that now, we're going to journalize them. That's what we call it, journalize. This is when we start to put them together, right? We put in the flour and the egg and the whatever it is. We're journalizing the information from our source documents. Remember, initially we spoke about a debit and a credit, right? So the journal is going to be putting the information where it is supposed to go, taking it from where we got it. And that is basic journal. Every journal entry have a debit entry and a credit entry, which means an in and an out. Wherever we get it from, we get it. Wherever we're gonna put it, we put it. And that is journal. We're gonna look at that as well, right? When we put the information in the journal, we end up with what we call the general ledger. The general ledger is just all the transactions. Everything that you put through the journal, yeah, it just comes into the general. It is all the transactions that you put in that is going to be in your general ledger. It's just a list of all the transactions. So if you go in your general ledger, you will see when you buy something, you will see when you sell something, you will see when you owe somebody, you will see when you pay somebody, you will see when you put money in the bank, you will see when you draw. Everything that you did as a journal is going to come out in your general ledger as just transactions, right? And then from the general ledger, which is all transactions, we get what we call a trial balance. And the trial balance is just a list of the balances in each account, right? So the trial balance is like this. Everything that you put in the journal went somewhere. Yes. The general ledger shows a detail of everything that you did through the journals. And then a trial balance is going to give you a list of these balances. So if you did 10 transactions and some went to bank and some went to asset and several went to asset and several went to payables and so on. When you look on your trial balance, you're going to see the balances in each account. So you will see that all the transactions that you did, your fixed assets, everything that you own is going to be 1.5 million. That's all you're going to see, just the balance. You'll see that your bank has 200,000. You'll see that the person that you owes is 500,000. You will see that the capital you put in is 1.5 million. That's all you'll see, just balances. So you can just pick up a trial balance and know that you owe somebody, or your total that you owe is a particular amount. Versus if you go in the general ledger, you'll see that it is Tom, it is Dick, it is Harry, Mary, Sue, all of that. So your general ledger will give you details, your trial balance will give you totals. And it is this trial balance that spins out and give you your financial statements. What is that financial statements? It is going to be all of these transactions that you have, same transactions from your journal to your trial balance, but now everything will be classified wherever you want them to go. Now you have to set it up, right? So you see your groups of assets, you will see your groups of liabilities, you will see your groups of receivables, you will see everything will be grouped, right? You will see how the money is flowing in and out. You will see your sales and your expenses, and everything will be grouped. So this is just a simple cycle. You start with the source document, and from you putting the information via your journals, everything is going to spin out straight to your financial statements, right? Clear?
Yes, Miss
As I said
Crystal.
before, it may be manual, meaning that you are actually physically writing it, or it may be something that you're doing on the computer. From you do it on the computer, you end up with a financial statements. You can print a general ledger. You can get a trial balance. All you need to do is get the journals in, right? So I will address anybody who has a manual system. Then when we're doing the one-on-one, then I'll show you how we're going to get it. But outside of that, as long as you use your accounting software, you get all of these different items in the cycle.
Is the manager still a part of the program this year?
I'm going to use QuickBooks.
Okay.
Mm-hmm. All right, so just use your eyes and get a snapshot of this. All right. So now, let us look at what we call source documents, which was the first thing that we had on in the accounting cycle. And I think I mentioned them over and over and over again. So you should be able to close your eyes and know what your source documents are. Your sales invoices. When you sell something and you create an invoice, your purchase invoices. When you go out there and you buy, and listen, your purchase invoice is not just when you go and buy something big, you know, it is anything that you buy that belongs to the business. And also remember that if you are using your own money to buy something for the business, you need to keep an account for it because the business now owes you. So you need to record it in your business as an expense or whatever it is. If it's an inventory, you need to record it in your business, and you need to record that the business owes you unless you are putting it in as capital. Anything that you return, so if as in Tanisha's case, if you have credit notes for things that you return, or you return something to somebody or somebody return to you, you need to have a record of it, and that forms a part of your source documents. Petty cash voucher for persons who give monies to buy small things. And remember, a petty cash voucher can be $50,000. One voucher, petty cash is what it is. It is petty cash. So for those persons who are using petty cash to buy a car, that's not petty cash. That's just exaggeration, by the way, right? So for persons who are running a petty cash, what we call a petty cash float, you need to make sure that you have a petty cash limit. So if it is that you have a float of 1,000, that is what you're using for small items, then you need to have that. It can't be moving up and down, and you need to have limits on what you use the petty cash for. So you can't say, okay, you have a petty cash float of $50,000, but one purchase is for $20,000. You need to be practical. You know the needs of your business. So you need to set a limit for your float, and you also need to know what each transaction, what's the minimum or maximum that each transaction should be. Your bank slips or check stubs, I don't know if we still do use check stubs, but for persons who have checkbooks and so on, your checkbooks, the stubs in the checkbook serve as source documents, or your bank slips, your bank state. So sorry, when I say bank slips, think about persons who are doing lodgements. I know you can just stick your money in the machine now. Sorry, but you need to ensure that you have something. I've seen where persons just go and stick the envelope in the machine, they don't get back anything. And then when you ask about it, they say they stick it in the machine. But you need to keep something for yourself. For persons who have maybe like a courier picking up your monies, you need to make sure that you have them signing to say they collected it, and you need to keep back records. Your bank statements are also source documents. And note that the auditors love to use bank statements, and so does tax administration of Jamaica. So if you have monies passing through that account, they are going to look at it and they're going to call it revenue. So even if it is your money, because remember that you're paying tax on the profit, so the tax people may look at everything that's coming in the account, whether it belongs to the business or not, and they're going to call it revenue. And once your revenue exceeds your expenses, that's what they are going to charge you tax on. So they're going to use your bank statement. Okay?
Yes, miss.
All right. So if you have receipts for payments made and amounts received, so Nicholas, make sure you're writing your receipts for your students. And any other information that you have that contains financial information, such as your exercise book that you write things down in, that could also be considered a source document. I don't have anybody that goes to the market, right? No, maybe Tishana, you do ground provision, you buy things at the market to sell? No, it's not Tishana, it's Tanisha.
Tanisha, right, I realize.
Yeah. Okay, I'm not hearing her. But anything that you buy, so if you go out on the road and you're going to buy, let us say a bag of ice, and you don't have a receipt, write it down in a book. Make sure that you are recording everything.
Question, miss.
Uh-huh.
So even for my mother who is a farmer, miss, she sells to Igla, per se, the persons who would have sold in the market, she needs to keep a track of everything that she sells. You're saying, miss?
She has a farm.
Yeah, she has a
Mhm.
farm. We partner with the farm together, miss.
Okay, so as long as she's doing that, I mean, whether she's doing financial statements or not, she will want to understand what's happening in the business. She needs to write them down. So if she goes
Okay,
to the market and she sells to the market, or she buys from the market.
She
She buys
sells
at the market.
to persons who sells at the market.
So when they come, she needs to know what she has to sell, and she needs to, because she wants to know if she's making a profit or loss, right?
Yes, miss, definitely. So you're saying
Mm-hmm,
that even
mm-hmm.
if she buy a tin of sweet pepper seeds, she's supposed to write that she buy a tin of sweet pepper seeds and how
Yes,
much
because
she paid for it.
that's a part of the business. That's a cost to the business.
Oh, thank you.
hmm Remember, when you're looking at the cost of the business, you have to look at everything, all of those expenses that you would have spent in order to generate the income. So she would have had to spend the money to buy the seed in order to get the produce to sell. So that is a cost
Indeed.
to her. Mhm. So when she's going to figure out if she make a profit or loss, then whatever she got when she something, she has to take out those expenses out of it to know if she make a profit or loss.
Definitely. Definitely, miss.
Mhm. Tishana, you're service oriented, right?
Yes, yes, I am.
What are your costs?
My
What would your source documents be to record cost?
All right, so I have to do a lot of I have a lot of little digital things running. So like I pay for Zoom. Zoom sends me out a receipt because we run training of various sizes. Some of them are
Mm-hmm.
online. So we have to keep the Zoom receipts.
Right.
Um
Do
um
you rent a place?
Periodically because my
Mm-hmm.
staff is remote, but we work in person together every Thursday. So we have
Mm-hmm.
to document the fees for that co-working expense.
Mm-hmm. Mm-hmm. Do
When
you do
we're
you travel out to conduct training or whatever?
Yes, so we travel
Mm-hmm.
out,
Mm-hmm.
conduct
So you
training.
know your the cost of your fuel can be a cost to your business.
Yeah, it is a cost, yes.
Mm-hmm.
And
Mm-hmm.
sometimes we do independent workshops. So we have to pay
Mm-hmm.
for the venue, the material, everything.
So
And
all of those things would be cost to you. So anything, any receipt, any
food, catering, all of that.
right, it would be a cost to you. So you
Yeah.
keep all of those receipts.
Sometime in the rush of things though, you get things mixed up because let us say we said we are gonna do the coffee break ourselves to make it cheaper and just order lunch.
Mm-hmm.
Sometimes we forgot to buy cups or something, and in the workshop you make somebody run go buy it,
Mm-hmm.
and then them
And
gone.
you don't record it.
You pay them back the money where them buy the thing for you, but it goes unrecorded. So yeah, that's a challenge.
Okay. Well, you need to find it. Even your phone, take a picture.
Yeah,
Remember that the phone, yeah. So take a picture with your phone of the receipt or so. And then when you take the pictures, you can create something on your computer and just forward all those pictures to that folder on your computer, that source.
yeah, that's a good idea.
Mm-hmm. All right. So whatever you do, just make sure that you you have the information one way or the other. Because when it comes to your auditing, it may become a challenge for you. All right. Now, when we're going to do the accounting entries now, all of these things from the source document, as I said, they will come in via journal entry, and the journal entry will affect your sales ledger, the sales information, your petty cash, your cash book, general ledger, which I mentioned. You may also, if you have any corrections that you want to make with, you can do it with the um with the journal entry. And these will become clearer when we're looking at QuickBooks, and I'll show you how to use the journal entries to record your accounting information. And then the general ledger, as I said before, I was actually detailing what I was saying. what I have here, and it is just a detail of all the transactions that you inputted from your source document. And this is detail, right? And if you enter, manually, you can just sit down there and enter one side of an entry, but know that your accounts won't be balanced, right? At the end of the day, when you're putting your financials together, it won't balance. But if you are doing it in the accounting software, it is not going to move forward if you don't have a double entry, right? So that's the good thing about the accounting software. It actually helps you while you are going along to maintain the double entry concept. You may end up putting at the wrong place, but the double entry concept is maintained. All right. And when you make errors, you can go ahead and use your journal entries, which we spoke about, to make the corrections, to move it from one place to the correct place. And as I said before, the trial balance will just list all of the accounts and their balances. And you can just see that one place at one time. So as the last statement say, you can quickly indicate to the business owner the amounts owing to them, because you will go to accounts payable, for instance, and you will see the total amount that is owing, but you won't necessarily see the details of who owes what. And then we get to the cake, which is the financial statements. Now, usually, most businesses have a 12-month operating period. You have some businesses that start and like at the inception, that tax will allow you up to 15 months when you're doing your financial statements, the first one. But after that, it's usually a 12-month accounting period. Now, the financial statements, as I said before, it helps you to analyze the information and helps you to plan for the future. We said that the main financial statements are the balance sheet, the income statement, and the cash flows. You have other things like the statement of changes in equity, which just speaks about the changes in the capital structure of the business, or you may have the notes to the financial statements. So the notes in the financial statements just really, for the person reading the financial statements, they will know what each line item means, at least the ones that have a number beside them. All right. So, but these are the three most important financial statements and the ones we will look at. All right. So, what does the balance sheet show? And it's good that where we are right now, we would have spoken about some of the things before, right? Because we spoke about the balance sheet and what the balance sheet showed, and or what we could find on the balance sheet. And Tanisha had said the assets and liabilities and the capital. So yes, what the balance sheet shows is what the business owns, which we call asset, what it owes, which we call liabilities, and what the owner contributes to the business, which we call capital. So when you look at the financial statement on the balance sheet, you should at a glance look and say, oh, this is what I own versus what I owe. And this is what I injected, or other persons along with myself injected in the business, which is known as the capital. At the face of the balance sheet, you can just look at it to see, boy, is what I own more than what I owe? You're in a good place. Is what I owe more than what I own? You have a problem, right? So you can just look at a balance sheet. So anytime you see a balance sheet, just take it up and look at it, and you can say what the health of that particular entity is. Then we look at the profit and loss. And the profit and loss, all it shows is the profitability of the business over a given period of time. as I said before, most companies run a 12-month period. However, you can choose to look at your profit and loss account at any point in time. So you can look at it month by month. You can look at it 1 month versus the other month. You can look at a quarter. You can look at 4 months, any way you want. But as long as you have the information in there, you can look at that profitability of that business over any particular period of time that you choose. And what is on there? It shows your income. Some people call it revenue. Some people call it sales. It is all the same thing, right? Whatever the business generates. And it shows what the business spends in terms of expenses or what the business purchases. And at the end of the day, you can look at it and know if you're making a gross profit or a gross profit, a gross loss, net profit, or a net loss. So it shows you whether you're making a profit or a loss, right? Now, the gross profit is usually just based on the revenue and the cost of sales, meaning the cost that you incurred in order to generate that sales. That's what the gross profit usually show. And then after that, no, after you make that gross profit, then you'll have the expenses. So can your gross profit, meaning what you make in just selling the items and the cost of selling the items, can it cover your other expenses? So your administrative expenses would come in now, your salaries and your cleaning and sanitation and your other office expenses and all those things. Can your gross profit, meaning what you generate from sales, net sales, sales minus your cost of sales, can that cover the other expenses of the business? If you start with a gross loss, means that you don't have enough money to take care of the expenses, right? If you have a gross profit, then you may be able to take care of all or some of the expenses. But you monitor that to see if your revenue stream is bringing you enough money to take care of your business expenses. And then the other area is your cash flow statement. And the cash flow statement, it just shows the movement in the cash flow. So the cash that you generate, how do you spend it? So it shows the cash that you get from out of the business itself, how it was spent, and how it was received. So for instance, how was the cash received? You could have got a loan, you could have injected capital, right? How was it spent? You could have bought some equipment, some more assets, you could have paid some loans, receivables may have come in, or payables may have been made. The cash flow shows you all of that. So you can use it and see where the bulk of the money is going at any given period, right? How are you spending your cash? Any questions?
Mrs. All clear so far.
All right.
Yes, Miss, crystal clear.
Okay. Oops. Sorry, I'm working with my two screens and I get confused here. All right, so what do we have here? Right now, I have on screen 3 financial statements from one company, and this is Spurtree Spices. It's public information. They're on the Junior Stock Exchange, right? So this was at December 2023. If you look to your that's my left. I don't know if it's is it your left where you're seeing company statement of financial position? That's left for you or that's right, I don't know. But let's focus on that one. So the company statement of financial position is the same as the balance sheet. What we know as the balance sheet, that's what it is, right? Now, if you look at it, you will notice that the balance sheet, it is set out in terms of assets, and then we have what we call equity and liabilities, right? So the equity and liabilities would be your capital and your liabilities, right? So if you look on the assets, you will notice two things. So they have set out assets in terms of non-current assets and current assets. It is just what you can get money for if you should have to sell the business, what you can generate cash, or what you can liquidate quickly versus what you can't. So the non-current assets would be the harder ones to sell. So your property and plant, investments, right of use assets, and so on. And your current assets now would be the inventory and the receivables and your cash and so on. So that's just a way of separating your assets in terms of liquidity, whether you can gain, convert it to cash quickly, should anything go wrong, or whether it would take a long time. And that is what determines if it's current or non-current. And then at the bottom, we have equity and liabilities, and we have the share capital, capital reserve retained earnings. This is just the capital structure of the business. They have shares, that means people bought into the company, share capital reserves, just $150. $150,000. I don't know what they're going to do with that. And then retained earnings is just the accumulated profit or loss for the period under consideration or to the period under consideration. And then again, we have the liabilities, which is separated into current and non-current. It's the same thing. Which one can be liquidated easily, right? I'm just pointing some things out to you on the financial statement, and this is just for reference. Maybe some of you are able to look at a financial statement and read it. Anybody like that? Can just look at a financial statement and read it? Who buys shares and all of those things?
Can I read it? If you want me to read it to you.
Okay, so some of the things you'd see on the financial statement, like you see where you see the word note and you see those numbers. When they present their financial statements, it's usually like a book, right? And all of those note numbers, you can actually go and find what makes up these figures. So for instance, note 11 is property, plant, and equipment. If you should go to that note number in their financial statements, you will see the different things. You will probably see computer versus plant and machinery versus software and so on. That's how it's like a detail of what is on the balance sheet here. And you also notice that they have comparative figures. So they show you 2023 versus 2022. So you can look at it and you can say, okay, their non-current assets went from 578 and it went up to 640. And this is all in, that would be millions of dollars, 645.05 million, right? You can see, for instance, cash. In 2022, they had $98 million cash. In 2023, they had only $23 million cash. So you now looking on their financial statement will want to know, what did they use all the cash on, right? And if you go in your cash flow statement, it should tell you what they use their cash on, right? The share capital, the payables, all of those things have a note number, and this just tells you what it was year over year. So you can look at it and see if there's a particular thing that you are interested in. You notice inventory moved from 127 to 155. Their inventory went up. So they're buying more inventory. It could be that they're buying the inventory or the inventory is not selling, right? Or they have some things that are not moving as fast, so they had to buy other things. Receivables, why aren't they collecting their monies? It was 167, it is now at $199 million. Receivables is what people owe you. So why is it that it is so high now, right? The related companies are now owing you $129 million versus 97. Why are you lending the related company so much money, right? And these are just the things you look on your financial statement, and you can ask yourself questions. And this is what somebody looking on your financial statement will look at and ask. Why are your receivables going up? Why is your inventory so high? Why is your inventory so low? Why is your payable so high? Is it that you don't have the money to pay, or is it incorrect? Right? So these are questions that come from it. Then you go in the middle and you look at the profit or loss statement. It's the same thing we call profit and loss. So if you hear somebody say profit and loss, or they say income statement, it is the same thing that they call company statement of profit or loss and other comprehensive income. Same thing. So you will see that their revenue has increased to $1 billion versus $906 million in the previous year. Their costs, it went up, not by much, and their gross profit is now 312 versus 295. That's not a lot, right? They didn't have other operating income. Well, they had other operating income from 1 million to 5 million. What is that? It could be something that they sold, right? Because anything that is other operating income is just that it's not a part of the regular revenues for the business, right? So it could be investment income or anything like that. And you look down and you see that their admin expenses 193, and you see impairment losses on trade receivables. You know what that is? That is like when they're writing off receivables. So things that they thought they would collect, they can't collect them again. In 2022, it was 8 million they wrote off. In 2023, they wrote off $1 million. So they are saying $1 million of what they thought they would have collected, they just couldn't because it went bad. Right? Finance costs, you notice it's 27 million versus 8 million. Finance cost is usually like your interest on loans. So it means that they probably got some loans and they are paying higher interest rates or more interest. Let me see if they have any loans over here. Yeah, if you look under current liabilities, they have a long-term loan. They move from 7 million to 42 million. So that's probably what they're paying the finance cost on. And that's how you just look at the information and ask questions about it. And the notes will tell you what these things are. All right. They made a loss. They didn't pay any tax, though they made a profit. So they probably had loss coming forward. So they didn't pay any taxes. And at the end of the day, they made 96 million versus 117 in the previous year. All right, good information. And then you go to the statement of cash flows. And again, you will see the various things that they, if you jump down to cash flows from investment activities, you'll see that they spent $93 million for purchase of property, plant, and equipment. And the year before was 38. So they are obviously investing in some sort of, perhaps they are doing some additional layout in their factory. Proceeds from loans, they got a loan again, $250 million, and they got the same thing like the previous year. So they are loan, but they paid back $256 million in loan. All right. You following what I'm saying? You're following how to look at the financial statement?
Yes, miss.
Anybody
Closely.
lost? This here that you have here is what would happen when you put your information in the proper order. So as I said, at the end of the day, you should be able to generate something looking like this. It may not have everything on it because of the type of business that you have, what you're involved in. And so you may not have all of these things on your financial statement, but you will have the basic, your assets, your liabilities, your capital, your revenue, your expenses, how you spent your money, right? And that this is just a general overview of what a financial statement looks like. You may go on your stock exchange and you'll see them. Some of them are very technical, as I said, because of the type of business that they are in. I try to find the most basic one that would, I guess, that all of you should be able to read.
Is when we go to the stock exchange website,
Uh-huh.
how do we get to these financials? Probably it's simple and straightforward. I just need to go there and explore it, but just asking.
So when you go to the stock exchange website, you will see, I think it says companies, and you'll see the list of companies. If you press on the name, it will bring you to that company alone. And on the dashboard there, you'll see financial statements. And you click any one you want to look at.
Okay, thank you.
So you can go on the stock exchange. These ones are on the junior stock exchange. So you go on the junior stock exchange and you'll see all the companies that are trading. You just click on the name. Some of them not trading. You will see a note, whether it's a dash, meaning that they're not trading, or you'll see an arrow going up, means that they're trading and their results are going up, or down means that they're declining. So anyone you want, you just click on it, and then it will open your profile, and then you'll see financial statements. You don't have to have a login. It's public information. All right. So I think in terms of my material, right, in terms of my material there, I'm done, but I wanted to do a poll. Robert, are you there?
Yeah.
Oh, I found it. I found it.
Okay.
Yeah. Oh, I have a poll here. All right, I'm going to try and launch a poll. Let's see. No, I don't like this poll, Robert. I don't like this poll. I don't like this poll. Okay. I'm trying to figure out how to. I'm trying to figure out how to actually set the poll, Robert. I'm seeing the ones I had before, but I'm not able to
Set it.
set up the. I'm not able to set it.
Okay. I think you're just supposed to press on the poll and then add the new questions.
Right, that's what I'm saying. I can't add new question.
Okay. One second.
I'm pointing on it. I don't see where to add it.
Do you see the plus at the top?
Plus. No, I'm not seeing a plus.
Okay, 1 second.
Just give me a moment, please, guys. I want to send you a poll because I want to see if you're with me.
So I see the questions you had before. You want to add new one?
Yes, I'm seeing those. Yes.
Okay, at the top right corner, there's a plus button.
No, I'm not seeing a plus. I'm
Okay.
seeing a dash. I'm seeing the box to maximize or to close.
Okay.
So I'm seeing the minimize, the box, and the yeah.
Okay. Let me see if I can change up something here.
All right. So while we try to figure the poll out, is there anything on the financial statements for Spur Tree that you would want to ask about?
And go back on the poll option again and come out, you see now.
Nothing different.
Okay. Oh, okay. Oh, I thought making you the full host would have given you the options to edit, but I didn't see nothing changed on your end. Could you put me back as the host? Just go
Yeah,
on.
I'm going there.
Okay.
Just a moment, please.
Okay. So one of the options I see we could do right now is for you to send me the questions and I'll upload them and then then release the poll.
Okay, that's going to take a while. So let me let me do it differently.
Okay.
Yeah, it's gonna take up so let me do that differently. All right, so guess what, guys? I would have been sending a poll to you now for you to answer, but we're going to do it differently. So I'm going to stop sharing my screen. Right? And I'm going to ask you some questions. And these are questions that is just for refresher. I'm not giving you A's and B's and fails and passes. It's just for us to work through together. All right. So no problem if you don't get it right. It's just for us to work through. All right. So let's start with the business structures. So I want you to tell me one advantage and one disadvantage of the limited liability company. And I am going to ask Tanisha, limited liability company, one advantage and one disadvantage. Tanisha? All right, let me ask Nicholas. Can you speak, Nicholas? All right.
If
Matthew?
I can, I'm in a little bit of crowd still. It's a little bit noisy. My background is a bit noisy. Repeat the question, huh?
Can you tell me one advantage and one disadvantage of a limited liability company?
An advantage of a limited liability company would be instead of you being sued, the company would have been sued.
Okay, okay.
Disadvantage, I don't remember any disadvantage, but I would say whereas for the sole proprietary or the partnership, you would need to do much of the taxation, but for the limited liability, it's a lot of information to give. Not sure if I'm saying it in the right context.
But I thought you just say you never know any.
A few. I don't remember.
Yeah. The government regulation
Yes.
really is one of the tightest thing for the limited liability company. They are really required to do quite a lot when it comes on to dealing with the government. And yes, the advantage which you mentioned, which was that you can be sued. And Tishana had summed it up so nicely. She says, you are the company and the company is you. So thank you for that. Thank you for that, Nicholas.
No problem.
Um, so this question now. So how can you safeguard against um, any issues you might have when a partner or should a partnership end in the normal way that a partnership would end? How can you safeguard against any issues? That may be a loaded question, but Tishana, you want to try that? How can you safeguard
Safeguard
against any?
against partnership issues.
Right,
So you would want to make sure that you have a clear contract that
right.
indicates the partnership agreements. How do you
Mm-hmm,
deal with the splitting of profits and
mm-hmm.
so on? You said a
Very
couple
good.
other things in terms
Very
of
good. The main thing is ensure you have a proper partnership agreement.
yes.
And that would solve a lot of the problems that happen when partnerships go bad.
When you say
Right.
Miss Karen, over make your
Huh?
partner happy, you have to protect yourself, you know.
Yes, yes, Matthew. All your trademarks and all your um those things that you have there, protect yourself because it is very easy for the friendships and all of those things that you do, the what you call this thing again? The handshake, what you call it? The golden handshake, where you do it because it's your brethren and you know the person from a longer time
Oh
and
my gosh.
all of them kind of
I'm
something there
telling
that you
you.
talk about. And then you
Teach.
find
Enough
that,
of them not like to see when you grow, although them go on like them video too, you know.
we are human being,
Yeah.
True,
right?
true.
Man. Them
And
don't want
those
to see you do
things,
better than them.
and those things come and bite you, and you sit down and say, "Boy, I never know that this one was like that, and I never know it would have happened." Safeguard yourself from the beginning, right? And then which one of the partnership, which one of the business structures now makes it difficult for you to obtain finance? It might be two.
Tool,
Anybody can
tool
answer.
trader
Mhm. And you know that the partnership can be difficult too.
as well. Yes, as well.
Yeah, yeah. All right, good job, guys. Good job. Let's see the next question. Oops. All right, so what is the first step in the accounting cycle? Tanisha, you're back with us? All right, anybody can answer. What is the first step in the accounting cycle?
Analyzing it and gathering your transactions.
That's right, gathering your transaction. And what when we say we gather with transaction, I mentioned two things. I had accounting and bookkeeping. Which is it?
Bookkeeping.
Bookkeeping. That's correct. So in bookkeeping now, oh, Abiathar is here. Oh yeah. Okay, I keep switching to go to the other. Yes, Abiathar, come tell me now about bookkeeping. In that process, what do you do? That's a very basic process. What do you do?
So bookkeeping is the initiative of recording and putting together financial transactions.
When you say
And
you pull together the transaction, what do you mean?
and these could include stuff like when you buy something for the business or when you make a purchase or
Right. So
when
you
you
need the
use the fund.
documentation.
Right.
Documentation. We don't get to the transaction yet. So we get in those documentation first, then record them. And tell me what else you need to do in that process. Tell me what, because you have something that you need to do in this bookkeeping story. So tell me what it is you have to do. Think about what you have to do, and then you'll get the answer. Beatar?
To track and record income and expenses.
Yeah, we want to make sure that we collect the information, that we record the sales invoices and journals, etc. We record those things, then we store them, and then we access the financial information upon request. So it's pretty much collecting, recording, storing, and having the things in a manner that it can be accessed when ready. Remember, that's what you're supposed to be doing now, right? All of those back
Yes,
information
sir.
that you're supposed to be that you're supposed to be going for and setting up. So you have some bookkeeping to do. So get your little box or whatever it is and put the things in different file folders, receipts here, invoices there, and so on, so that you can find the things when you're ready for them.
So what if it's a case where you have closed the business before, miss, and some stuff that you used to use in the closed business, you had put it down and now you start to use it in this business, but can you carry over those receipts per se?
Is it the same business?
No, I would
Carry
have
over,
closed
oh
that
yeah, carry over business from your old, carry over receipt from your old business to your new business if it's not the same business.
But you're answering Abiathar, you're asking him a question.
Well, yeah, I'm kind of ask that question still.
Okay. All right, Abiathar, explain, please. I'm going to explain again. Explain again, Abiathar. Tell me what you're carrying from where.
So what I would be saying is that some stuff that I bought for the previous business I am now using it in this business, right? So I wouldn't have to buy them again. So what I'm saying is that do I need to record those as well?
Because remember what we spoke about as double entry. You must be getting the information, getting those things from somewhere. So in this new business, you're going to have to record them because they now belong to this new business. But the question is, where did you get them
Oh,
from?
Yeah, so
sorry,
it's either you purchase it of
sorry.
it or you add it as your own asset as you
Capital. That's
contribute.
right. Mhm. So it could be capital. You could consider it as capital coming from you, the new business, because it's two separate businesses. But you have to record it, and that's the problem that we run in a lot of times is that we just move in things in the business and we don't record them. So it is going to be Abiathar like capital you're injecting in. It's just that the capital is in terms of whatever those items are, but they have a value. Yes.
Nice, Miss. Nice. I think this would sell as a master class, Miss. This entire topic to itself, because this has opened my mind so much from this morning. I'm telling you, it's
Mm.
refreshing, man.
Okay. Good. Good to know that it is helping.
It also open what you work for do. Not
But
just the
I tell you,
mind.
one of the nicest segment, it's a lot, but still, it give you the reality check for real, and
So,
it's one of the
the
biggest
thing is,
contribution you can do to your business, man. I tell you, get your
when
account.
you start from the front, when you start from the beginning, it sort of help as you go along. What happens is when you don't start from the beginning, or you reach the middle or you reach the end and you're trying to go back, that is when you have all of the problems coming up because you can't remember, you lost things,
And
you
you never write it down.
you never write down things and all of that, and it gets the whole thing confusing. So when you get into your business, no matter where you're taking the thing from, it needs to go in and it has a value. So you can't be using what you're using funeral supplies. You can't be using, I don't know, gloves, right? And you just have gloves that show up in your business. Where did you get it from? Yes, you have it physically there, but you need to put it on your books. It's your contribution to the new business. Yes, so it's capital that you're injecting, but in terms of gloves, it may not. Can you remember? You can inject capital in your business in terms of actual items, or you can do it as money. So you would be injecting those as capital in your new business.
Yeah, and you have to know if it is becoming an expense to you, how much you have spent on gloves, if you have to get a cheaper gloves, or that is a affordable gloves over time, you will have it on record so you can assess your
And
spending.
right, that's true, Matthew. And that is why when you're going to look at the software, when you get your when you're looking at your recording information from your suppliers, you may record the information, and over time, when you analyze this information, which is where the accounting comes in, you can see that okay, this supplier is much more expensive than another supplier, or this glove from this supplier, based on you're using it in the business, didn't fit so well on whatever it is, so supplier is one that you won't use again. But if you don't have the information recorded somewhere, you might not know. You might end up, somebody else in the business may look and say, okay, you bought from Red Dot Supplies, and they just went and they bought it, and there's nothing to indicate that this supplier was not a good supplier, don't use again. Only you know. And because you know, is almost like everybody should know, when that's not the case, because the information is not recorded for somebody to go after you and get proper information from what you have there.
And just to clarify, this is what customers will come and ask about when they come and ask for financials.
So, as I said, that was a peculiar one that I saw that asked for, as customer, asking for a financial. I mean, you can research a business anywhere. So if you have your funeral supplies there, I can perhaps go on Google and find you, or I can ask people about you, or so on. But in terms of your financial information, I don't know what a customer would want, but I think it was more about the reputation of the person they were buying from, to see if it was a company that sells good things, a company that has good, probably other customers, to see if other people bought from them. I believe that's what they were looking for, but I've not seen much of customers asking for financial statements.
Okay, and just to clarify one more thing here, Miss, the employee's perspective, correct? The we are supposed to declare this stuff to the employees when they ask, like for them to be able to
Please
compare
declare
what
that
we're
one of
buying.
my expert clients, Tina
Okay, guess what?
Fernandez,
It is your
as
it is
well
your
as
prerogative.
another one,
Usually when a
Tiffany Sama
company is
Ferguson. I can proposed.
Wait there. I think Tishana is talking.
Sorry about that. I just had
Yes,
realized I
that's
had a
right.
clash and trying to sort it out quickly.
Yeah, right. What were we talking about again? Oh, the employees. So usually it's bigger organization. You know, people not going to, they can't demand it of you. But persons, especially like when people have in big organizations and they have what you call the thing, oh Lord, union. So, you know, the unions, they might say, okay, the staff is supposed to get bonuses and they're not get it. So they demand their financial statement because they want to know if it's true that the company is saying that they're not making profit and so on. So it's usually in those cases. But outside of that, it's your prerogative. Outside of that, companies may choose to give employees information regarding, as I said, the different segments that they are responsible for. So again, it could be tied to compensation. So suppose a department, they get performance related bonuses to meet targets. Then they may want the financial information in order to um to see where they are in terms of meeting their targets, to know if they need to go harder, if they are there or so on. So they may require that information. It may not be the full information, but it may be aspects of the information that relate to their cause. Making sense?
Yes, miss, most definitely.
Mhm. Okay. Any other questions before I go? I do two more poll questions. Two more questions. All right. Locks. I'm trying to manipulate the screen. Okay. Tell me two things that you would find on a balance sheet.
Outside of assets and liabilities, you want specific assets, loans owed, um, and machinery that the business owns.
Okay. Thank you. So assets, she said it, assets and liabilities, and she gave examples. Awesome. All right. Which one of the financial statements would I look on to determine what how I'm spending my money or the different areas I'm spending my money in?
That sound like cash flow. But you say how, if it's expenses, it's
No,
income
no.
statement, but the how sound like cash flow. But what sound like
Which,
income statement?
which, I'm not sure what I said now. Which areas I'm spending money on
Or
in
which
the
areas?
business? Mhm. And you
That
said
sound
it,
like
it's a cash
income
flow.
statement because it's
Yeah, because
expenses,
remember,
how much.
remember the cash flow. So the income statement would give you just income and expenses.
But the movement of the money is on the cash flow, but will it tell the areas?
But you can see the areas, because you can see that if it's
Okay.
receivable, you can see if it's fixed assets, you can see if it's loans, you can see if it's capital, you can see that on the cash flow. Remember
Yes.
that the profit and loss is just going to have income and expenses. You
Right,
won't see much in terms of the balance sheet anywhere except in the cash flow.
right.
So while you can compare 1 year over or 1 month over another for the cash flow, for the balance sheet, then in the cash flow itself, you will see the different areas. You will see if it is your receivables versus your payables versus loans versus interest, all of that you'll see on your cash flow statement. All right. And so what did we do today? What did we do today? We just looked at the main types of business structures, and we looked at the sole trader, the partnership, and the limited companies, the advantage and disadvantage of each. they are not exhaustive, but these were just some of them that we came up with. Then we looked at bookkeeping versus accounting, and we said that bookkeeping is like that first very important part of getting our accounts right. If the bookkeeping is right, then 10 chances to 1 the accounts will be right. So I encourage you to look at it as a relay. You start out with the bookkeeping, you put your strongest man as a starter, right? So you want to make sure that your start is good. So make sure you have your documentation, make sure you keep them properly, make sure that you're collating them, all of that. Make sure you photocopy what needs to be photocopied, put in folders what need to be put in folders, because you want to ensure that these are there so that your accounts can be done, so that when your auditor come in, they don't have a lot of questions, right? And that they can verify what you are reporting to them. Remember, the financial statement is yours, and whatever it is that you are reporting, you are accountable for it. And that's exactly what the auditor asking you. If you can't account for what you say you have, then you're going to have a problem. And then we looked at the accounting cycle, where we spoke about that same source document. There it is again, all of that bookkeeping leg. And from it, we had the journal entries, which put the information in the system, followed by the general ledger, which we said is a detail of all the transaction you put in the system. That gives a trial balance, which is just a list of each account and their balances. And then we end up with our financial statement, and the cycle starts over. All right. And then what am I going to do for the next time? So for the next class, which is going to be on Wednesday, we're going at what we call the accounting equation. We look at the double entry concept in more detail, and I'm going to show you how to just do some journals, and we're going to look at some accounting terms. All right. And that takes care of it. So what I want you to do as an assignment, all right, I want you to think of your business, right? And I want you, when we come to the next class, when we start our overview, I want you to tell me for your business, what are your assets, what are your liabilities, and what do you have as capital, right? So it's going to be your business that you're going to give me the examples from. Hear that? Your business, assets, liabilities, and capital. And then the financial statements that we did for purchase prices, I want you to look at it. And I want you to look at it and look at it as if you are going to, you want to ask some questions about Spurtree, right? So look at their balance sheet, look at their income statement, look at their capital, their cash flow. I was sort of working it through before, but I want you to look at it, and you are going to look at it time over time, 23 over 24. You're going to look to see if anything went up or went down, and you're going to start asking yourself questions about the financial statement. And then you're going to try and figure out, okay, I wonder what could have happened here. Is it because, right? So I just want you to, not a test, it's just for you to look at it and try to ask some provocative questions about what you're seeing on Spurtree. Think about it as if you were going to invest in this company. What would you want to know? What look off to you? What would you have question? If you saw the manager, what would you ask him about the business? Kind of a thing. All right. So that is it for your assignments and the overview.